Hey there, entrepreneurs. My name is Sushant, and welcome to Trep Talks. This is the show where I interview successful e-commerce entrepreneurs, business executives, and thought leaders and ask them questions about their business story and also dive deep into some of the strategies and tactics that they have used to start and grow their businesses. And today I'm really excited to welcome Cyndi Thomason to the show. Cyndi is a certified master profit first professional, and we're going to talk a little bit about that. And the founder of and president of Bookskeep, a virtual company that provides bookkeeping and profit-first consulting services to e-commerce clients all over the world. Cyndi is passionate about data analysis and process development, and she uses that passion to educate her clients and help them structure their businesses to maximize profits. And today I want to ask Cyndi a few questions about her business and services, and also some of the ways she helps her clients and e-commerce businesses succeed. So thank you so much for joining us today at Trep Talks, Cyndi. Really appreciate it.
Yeah, delighted to be here.
So let's get right into it. Could you share a little bit about your business, Bookskeep, and what services you provide?
Okay, well, I created the business to be a general accounting firm, and we're located in the Midwest, Central Arkansas. What I learned fairly on from one of my mentors, Mike Michalowicz, that wrote Profit First, was that I really needed to specialize. I needed to be able to grow and to really serve people at a deeper level. I needed to focus on one industry. And at the time when I was making that decision, I had several e-commerce clients that had come to me because of their interest in Profit First. And I did this exercise just to think about alignment, and we were very similarly aligned. I wanted a remote business. I didn't want to have to go into people's back offices, to do their bookkeeping. I wanted to work from home to be with my daughter. I was looking for flexibility, and I found that that's a lot of what was going on with those clients in the e-commerce world. They needed flexibility too. We were working with QuickBooks Online when it first was a thing to do in the cloud accounting world, and so I knew I needed to work with people that were technology savvy, that they were okay with me having admin access to bank accounts and things like that. That world of technology and connectedness wasn't something that was going to scare them. So for those reasons, I decided to focus on e-commerce, and really over the years have enjoyed the opportunity to see how small business is part of that whole bigger picture of, Amazon.com and Shopify. All those platforms that are really big now really are supported by small business people who are trying to make a business work in their own terms. And that was just very much aligned with what I was trying to do, because I needed to be at home with my daughter and get her to tutoring, etc. And so it's kind of been neat to see how our interest and underlying reasons for business are similar.
Okay, so when a new customer or client comes to you and says, I would like you to manage my bookkeeping services, can you walk me through some of the first steps that you do? Do you audit their current books? Do you ask for certain information so you get an idea of what they already have been doing? And do you sit down with them and say, hey, how you would like me to set up your books? Could you share some of those first steps that you do with a new client to set up their books properly?
What I found is that the clients typically don't know what they need, and that's why they come to us. So we have a e-commerce chart of accounts, which we would use to build out the structure of their books. So most of the time when they come to us, we know what framework that they need to be, their chart of accounts needs to be built on. If they're selling on Amazon or Walmart or Shopify, we've got charts of accounts that address all of those platforms, and that informs us as to how we're going to build their books. We know that we want to treat every client to having good information as a result of working with us. So we would always build their books with this modified cash or modified accrual basis, because that's where you get the good information. That's how you build the books to be able to sell the business later. So we don't want to set them up with something inferior. We want to set them up in a way that's going to give them what they need now and down the road. So we've got that framework in place. And then the other pieces that we need is, if they've already got books that they got from someone else maintaining them, or maybe they've maintained them, then we would look at that depending on where we are in the year and say, okay, we'll start now doing it our way, but you'll have your way up until this point in time. And I can tell you, every time we've ever done that, because the client had paid or they had an adequate set of books from strictly accounting speaking. But every time that we've done that and then gone forward, and do the rest of the year the way we do it, they come back to us and say, oh my gosh, I want that for the whole year. Can you go back and fix up the rest of my books? And in fact, many times we have people say, can you go back to the beginning of my books and just clean up the last 2 or 3 years? Because when they start to see the information come out in a way that's useful, they want that for all of their data, not just for some piece of it going forward. Typically, the things that, if somebody has a set of books, then, they probably already have, either QuickBooks or Xero, which are the 2 accounting systems we recommend. They probably already have their bank accounts connected, their credit card accounts connected. So those things we just continue on. But if they're coming to us brand new, the things that the first decision they need to make is, are they going to want to work in QuickBooks Online, or do they want to use Xero, which is the preferred accounting system that they might want to use? And then going forward, do they want to use a system like A2X, which integrates and pulls across all the data from Amazon and Shopify? Or are they going to be okay with a less quality way of recording some of that information, which doesn't get it on an accrual basis? We have to have their bank connected, their bank information to be able to help them connect it. So those are the kinds of things that we need just to kind of get started.
From your perspective, what are some of the most important numbers, even in those financial statements, that you think describe the health of the business?
Well, it's interesting because, I'm in a lot of Facebook groups with sellers, and they're all keen to post their sales numbers. And sales numbers are fine. But the reality is how much you keep at the end of the day, not how much you sold. So to me, the most important number that people need to be paying attention to is their gross margin number. So if you take your sales and you subtract out your product cost or cost of goods sold, what it costs you to generate that revenue, whether it's for the product itself or shipping of that product, the fees that Amazon or Shopify may have charged you, maybe you had someone prep, or maybe you've got packaging, the things that are related to that product. What did that cost to be able to generate that income, and how much money does that leave you with? And once you've done that analysis and you understand your profit margin, your gross profit margin, you want to be at about 30% or more.
So
Anything
this has
that
not
goes below.
So this has not excluded any of the operating expenses. So gross margin
Correct.
includes the operating expenses.
Gross margin does not. It just is specifically related to your product. What did it cost you to you sold this product for $10,000? How much did it cost you to have that product that sold? So maybe that's $5,000. So then you've got $5,000 left that you can then allocate to your operating expenses. So to me, that gross margin percentage is is something that I don't see people paying close enough attention to, and that it's really a key component to whether or not the business is going to be profitable. Because if you're not making a profit at that level, then you can cut all those operating expenses out to zero. It's still going to be challenging to support that business long term, just to have the cash to turn over and buy new inventory and to pay for advertising expenses, et cetera. You really have to understand where your gross margin is and make sure it's 30% or better.
Okay. Now we can talk a little bit about different best practices and tools and processes that you would recommend e-commerce businesses to set up. Now, I know you've already mentioned the profit first methodology a few times. Mm-hmm. Could you share what this methodology is and why is it important? I would assume this is not just for e-commerce businesses, like this could probably be applied to any business, but how do you apply this to e-commerce businesses?
Okay, so first what it is, it was, Profit First was developed by Mike Michalowicz. I think the first time I encountered Mike was around 2014. So it's been around about 6 years. It's basically that envelope system that maybe your grandmother had, where she takes the money that she brings in and puts it in different envelopes, some for maybe the house payment, some to buy the groceries, some to put away for Christmas shopping, whatever. It's the same kind of idea, except it's done with bank accounts, because now we all pick up our mobile phones and we look at our bank accounts in the morning to see how we're doing. And that's kind of the equivalent of being able to look in your bank account and go, oh, when I go grocery shopping, I'm able to buy this much. So what Mike has done with his process, and it does fit any type of business, what I did was customize it for the e-commerce industry, because inventory is such a huge component. But the idea of it is when you get money in, you put it into a bucket for a purpose. Every dollar has a purpose. So for our clients, the lifeblood of that business is inventory. So we want to be sure that we're putting aside dollars for inventory. Then we put money aside for profit. Too often, profit is just what's left over at the end of the day or at the end of the year when you go have your taxes filed and your accountant says, well, you made a profit or you didn't, but you've waited all year to even know that information. Mike's theory is that a business is there to serve us as an entrepreneur. And if we're constantly putting the money back in the business or having it in one big bank account so we don't know whether we're making money or not or what we can use it for, then that business is not serving us. And that's where we get into situations where we're putting too much money in operating expenses. We're using those dollars that should be paying us because we're working hard, and there's our family, we don't spend as much time with them. There's so many things that suffer when an entrepreneur is really in there trying to get something going, that you've got to reward yourself. So taking dollars out for profit, for owner's pay, setting aside dollars for taxes, those things just have to happen first. And then what's left is the operating expense dollars that you have to run your business. So it's a different way of thinking about it. The old way of sales minus expenses equals profit is just turned around, and it's sales minus profit equals expenses. And so as long as you have taken care of your inventory, taken care of your profit, your owner's pay, and your taxes, what's left is what you have to run your business on. And it creates pressure on the organization because you are having to operate at an efficient manner. You're having to be innovative. You're having to be frugal. And those things are always good at driving the right behaviors in business. So that's how it works. And it really does, it works for every kind of business. The key component for making it work for e-commerce businesses is making sure you peel off that amount for inventory so that you can always cash flow your inventory. Because when people get into trouble in e-commerce businesses, it's because their inventory payments happen in advance, when they have to pay for their product is so far in advance of when they're ever going to get money back from selling their product. And many times they're having to reorder the second or even the third time before they've started to really get cash out of that first batch of inventory they've sent in. So having inventory cash flow covered is really important because it really has a different rhythm to it than what operating expenses have. And it's separating those things really gives you a lot of clarity.
Okay. So basically what you're saying is that when a business receives money at the end of the month or, whenever throughout the month, if it is in one account and it's just one number, you don't really have a way to say, okay, everything becomes inefficient. So if you don't really have a way to moderate your expenses, so it's kind of like you see one number and you can say, okay, I need to buy this thing, I'll because I see the money there, I can go ahead and buy it, and you don't have a way to separate out and say, okay, have I even accounted if I'm going to take out any profit out of this? Have I accounted for inventory and things like that? So in a way, if you just have one number, it's just a very inefficient way of, you don't really have a very efficient way of allocating it to different places. Whereas if you separate it out, then you have better visibility of where certain money is going. Is that the idea?
Exactly. That's the idea of it, and the principle behind it is a behavioral principle called Parkinsons Law, and not only is it inefficient because you can't see it, you can't, if you look at one big bank account and all the money's in there, and you can't tell, I've got inventory payment coming up next month or whatever. You don't have that clear visibility of purpose for that money. But the other piece of it is, as human beings, when we see a lot of something, we feel like we have a lot of it to use, and we get busy thinking about what all I might do with that money. So at the end of Q4, for example, when e-commerce sales are just going crazy and all this money is showing up in people's bank accounts, I encourage them to just put it aside for a little bit, because that money, if it's sitting there, you will find a reason to use it. It will be frittered away. And if you put it aside, then it will be a conscious decision how you want to use that money. Do you want to use it to get a jump on inventory for next year? Or, what is the purpose behind that money? And when it's sitting there all together, Mike explains in the book, he uses toothpaste, and he says, if you've got a whole big tube of toothpaste, when you put toothpaste on your toothbrush, you just squeeze out a whole lot of it on your toothbrush. But if you're down to the very end and it's going to be 2 or 3 days till you get to the store, you put just a dot, right? Yeah, and you're like, okay, that'll do. And it'll last me. And so it's kind of the same thing, because Parkinson's Law basically says you use what you got. So if you've got a lot of something, your consumption of it is more liberal. You feel like you can be more free in making decisions for using that money. Whereas if it's constrained, you feel like I need to be careful here. Because I can see my inventory account has enough money in it to pay for my next order of inventory. So I'm being careful. I know that flow. Whereas if that whole inventory dollars were in your OPEX account, it would really make you think, there's a whole lot of money there, but have you really factored in what your inventory costs are? It just gives you visibility for the purpose of the money.
So this idea of creating buckets, so, I've heard you say that there's an inventory bucket, there's this operating expenses bucket, there is this profit bucket. Are there, is the idea that the more buckets you can create and the more you can separate out the different numbers, the easier it will be, and the better visibility you will have in your business. Like, what is the minimum number of buckets that one should create?
I think e-commerce businesses that are just getting started need 3. And one is separate inventory and cash flow. So that's your 2 checking accounts. And then you also need to have a profit account. So just to kind of get started, to get a feel for how this works, have an inventory checking account and have a operating expense account and a profit account. So when you get your first settle money in, say from Amazon, you can look at what you sold and say it's worth $5,000. That to replace that inventory you just sold is going to cost you $5,000. Put that $5,000 in that inventory checking account. Then take whatever's left, take 1% of it and put it in a profit account. And then the rest after that goes into your OPEX account. And then that'll have money there to pay yourself and to pay taxes. Ultimately, what I recommend is after you've kind of got that figured out and separating inventory and OPEX is working for you and you're building a profit account for a couple of purposes. I'll talk about that in a second. After you've got those 3 accounts working, then you would probably want to take your operating expense account and carve it up some more. Okay. You know, if things are going well, you're going to owe some taxes. So create yourself a savings account for taxes. And I always suggest to my folks, and now is the perfect time to do it, go talk to your CPA and find out what your tax burden is going to look like and be sure you're setting aside money for next spring when those tax bills are going to come due. Separate money aside for owner's pay, because while this may be a side hustle for you now, if you decide that you want to quit your job, that's the bucket where you're going to pay yourself. If you decide this is getting big enough, I've got to hire somebody, that's the bucket where you need to have some money set aside to run this business. And we call it owner pay. And then the rest of it is OPEX for your subscriptions and your bookkeeper or, whoever else you have to pay. But those are the 3 I start with just to get a feel for it are inventory, OPEX, and profit. Then I would add the owner pay and taxes next. But there really is no limit.
Now we're going to move on to our rapid fire round, where I'm going to ask you a few quick questions, and then you have to answer them in 1 or 2 words or 1 or 2 sentences. So
I'm not good at that.
Well, these are straightforward questions. So, do you have any book recommendations for entrepreneurs or business people in 2020, and why?
This one right here. Can you see it?
Yes. Ultimate Blueprint.
The Ultimate Blueprint for an Insanely Successful Business by Keith Cunningham. I love this book.
And that's just a regular business, but that's not an accounting book, or?
No, it's truly written for any entrepreneur to help them understand how money flows through their business.
Okay. An innovative product or idea in the current e-commerce, retail, or tech landscape that you're excited about? Innovative product or idea.
I'm really into Promoter.io right now. It's a net promoter score system, and it's really bringing some good data to us as to how we're providing services.
So this is just like a survey that you send out, and you get some data out of that.
Mm-hmm.
Okay.
Mm-hmm. It automates that process.
A productivity tool or software that either you use or you recommend?
A2X Accounting.
Okay. A startup or business in retail, e-commerce, or tech that you think is doing great things right now?
Say it one more time. Startup or
business that you think is doing great things. Could be in e-commerce, retail, or tech.
Slumber Pod. They're doing some really cool. They just got funded on Shark Tank. They're doing some really cool stuff.
Okay, slumber pod. Okay. A peer entrepreneur or business person who inspires you.
My mentor, Mike McAllowitz.
Okay. The best business advice that you have ever received or you would give to entrepreneurs.
It's a quote from Peter Drucker, and it says, culture eats strategy for breakfast. And I love that.